Hi there, a very good morning to you all of you. And today I'm here with another video on Simply Stocks. And today I'm going to talk about a very interesting pharmaceutical company which is in the small cap domain, less than 1000 crore market cap company. So stay tuned for that. We'll discuss about the Nifty and then we'll discuss about this pharma firm as well. An interesting company altogether. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should that with their own due diligence and research. And I'm not in favor or against any company that I talk about. I'm not a member of the NSE and BSE, and that whatever discussions I have on stocks and markets, it's purely on for educational purposes, and it's purely on the basis of my experience over the last 12, 13 years into the market, being in the market as a retail investor. So kindly take that on note. All the financial decisions with respect to investments are laden with market risk, so that remains. Before I talk about this company and the Nifty, a small request: kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get that $10 membership, you get access to my portfolio, a number of companies that I keep on analyzing and putting on whether which companies are really doing well every 3 months after results and which companies are not doing that well. Discussions on domestic and global markets, so we talk about it. We have analysis on sectors, etc. Everything is in there, and you can ask me any number of queries out there. You can be a member on WhatsApp, Patreon, etc. For WhatsApp membership, kindly do email me. So now let me take you to the money control website, and what we see here is a very interesting number. So Nifty is at 19,230. I remember when the fall of Nifty took place, it was from 19,220, 230 levels, and it shot down to 18,800. So what we see here is this closing above 19,230, and for Dow Jones to move up the way Dow Jones have moved up. So I'll just give you an idea on Dow Jones as well. The way it has crept up over the last two, three trading sessions. And you don't need any big charts to analyze that. Even if you take out the 1 month chart on Google, you'll have an understanding that Dow was nearly 30,000, 32,400, even below that on 27th of October. And then slowly it has crept up, and now it is coming back to that high zone, and probably beyond 35,000 we'll see a major move on Dow Jones. So if you see here, I don't go through extreme analysis on charts in order to understand markets. You can have an understanding in here that 34,400, 500, once that gets taken out, will be in for a big move here, will be in for a big move in India as well. For that, the FII, you can say, selling needs to stop. So if I take out FII data from the money control website, you'll have an understanding that on the 3rd of November, it was only 12 crores of selling that we saw. On 2nd of November, it was 1200 crores. On 1st of November, it was 1700 crores. And it increased in October. In October, they sold around 29,000 crore, and in the last week of October, the selling was immense. In fact, one of the days in the last week of October, we had selling of around 5,000, 6,000 crores. So this is abating. We are seeing we are seeing at the moment a situation in which the markets per se are behaving in a manner in which it is saying that it's going to bottom out. The market looks like bottoming out for the foreseeable future, for the next 2 3 months. The global markets, I'm saying, so the Indian markets will do the same. And once the FII selling abates, even if there is no huge FII buying, we could see the market go up. So I won't be surprised if this 19,230 becomes 19,530 in the next 2 weeks or so, 2 3 weeks. We head towards 19,500, 530. And why I say that is because if you look at the moving average part, then you'll have an understanding that the market per se at around 19,500 or so is closer to the 50 DMA. And so, in that sense, we could be in a situation where 19,500, is where the market should end up being in a situation of where it could have some sort of a resistance. So that's the call. So in my opinion, if you see here again, simple chart, just have a look at it, and you'll see here that 19,600 or so, 19,630, 600, all these levels are a real risk to the market, are real, you can say, resistance to the market. On 6th of July, we hit 19,497. So the next level of resistance, in my opinion, is towards 19,500 once the highs of yesterday is taken out, or highs of Friday is taken out, which is 19,276 if we see here. So once that is taken out, we could see a 200-point rally on the Nifty. That is my call. And around 19,500, you have the 50 DMA. So that's where the market could just give a breather at the moment. But we could see very decent rally in here. So considering that, I believe the mid and small cap index should do well. One stock that I have brought to you, and probably on every Saturday, not Sunday, but every Saturday, I'll try to bring to you small cap stocks that I feel, or small cap companies that I feel are going to do well over a long period of time. Now this one, and most of them, 99% of them will not be in my portfolio. If that stock is in my portfolio, I will definitely let you know. It will be a disclaimer. So normally it won't be in my portfolio. And the reason for that is not that I don't want it in my portfolio. It's just that I don't have the funds to have it at the moment, and I'm not in a position to take such a risk. And remember, buying into any company which is less than 3,000 crore market cap is laden with risk. I'm not saying even 1,000 crore or 500 crores. I'm saying less than 3,000 crore market cap companies can go either way. So taking that into consideration, I have brought to you Vikram Thermo India Limited. This is a very interesting company, 380 crore market cap. Uh, at a 17 times PE, which is very reasonable. A return on equity of around 20 times. It is trading at around 100 rupees, near its highs. We'll discuss about its chart, but let's discuss about what the company does. So basically, it is engaged in the business of manufacturing and selling basic pharma copolymer drug coat. You can say diphenyl oxide, etc. So basically, in layman's language, they produce those products that are coatings on pharmaceutical drugs, on pharmaceutical medicines, on medicines that people take normally. If you understand, there are some products that are slow releasing products in the pharmaceutical space, slow releasing drugs that people use in diabetes, in other forms, even in blood pressure, etc. And there these products are used so that the coating is in there to have a different taste to it, so that people are able to take those bitter medicines that we call it. So all those taste coatings come from these kind of companies. Vikram Thermo is one of the larger players in there. So if you look at the product portfolio, pharma polymers contributes around 70% of their you can say business. They have two brands in there with the name of Drug Coat and Dr. Coat or DR Coat. That's the brand that they have. Plus, they have business in aromatic chemicals as well, which is around 25-27% of their business. The company is a leading player of diphenyl oxide used as perfumery stabilizer for manufacturing. You can say heat transfer fluid in India since 1985. The chemical is used as a perfumery component in detergents, soaps, essential, you can say sticks, etc., essence sticks. So that's around 27-28% of their business. Pharma polymers, as I explained, the coating that we see in medicines is around 77-75% of their business, 72-73% of their business. That's how the breakup is. If you see here, pharma polymers is around 72%, 28%, as I said, from that business of a fragrance, as I explained. Increase in export sales have taken place over the last 4 or 5 years, and it's now more than 20% from around less than 10%, say 5 years back. And that has been their major chunk of, you can say, money coming in for Vikram Thermo, that around 22-23% of their revenue comes from export. 77%, 78% is from the domestic market. As I explained, the P is interesting. The chart is very interesting. Over the last year or so, the stock has gone from around 57, 58 all the way to 130, so more than doubled, and then is consolidating at the moment. Looks good. The company looks good, and when you see the numbers, you'll have an understanding. So in September, what they did was the results just came in 34 crores of sales in September 23 versus 29 crores of sales. So that's a increase of around 11-12%. But you look at the margins from around 25.8%, it has gone to 35.8%. That's a huge jump in margins. Top numbers, EBITDA of 12 crores versus around 7.5 crores. A very good numbers. Bottom line, again, net profit of 8.25 crores versus, you can say, 5.3 crores last time around. So huge jump of around 60-70% in profitability, although sales jumped by 11-12%. So that's where the EBITDA expansion has taken place. And so overall, even on the balance sheet front, it's pretty good. Reserves are in there, 70 crores, only 11 crores of borrowing. uh, if you look at the shareholding pattern now in here, you need to understand that FII holding is extremely less, in fact, non-existent as I see it. And even in public shareholding, there are a few large investors in there, one or two, but no major huge investors in here. So I have a feeling that this company is set to do well over the next 4 5 years, as you can say pharma is going through a huge bear run in terms of business, and this company is doing extremely well in that bear run. So that's where we need to pick companies with respect to which companies are doing well in a difficult sector, in a sector where the sector is not doing well. The sector is going through a very difficult phase, but that company is doing well, so that will continue to do well once the sector comes back into picture. So at 18 times 380 market cap, at around 2.5 times sales or so on the forward basis, looks good. But again, do not invest more than 5-6% of your total holding. A very decent set of numbers. So at least for the time being, this looks good from a medium to long term point of view. I won't give you any targets or anything. You do your own analysis and then take a call as to whether to get into the stock or not. But overall, the business per se and the company looks very decent. So this was my video on you can say this company and the Nifty. Again, disclaimers do apply. Please like and subscribe my channel and hit the bell icon so you can get my video straight away when I post it. Kindly support me on Patreon. The links of the Patreon site, etc., will be in the description. Thank you.